Again, another odd week in energy markets and energy prices. We looked at the cutback for the beginning of March by Russia of 500,000 barrels. That's on top of OPEC's decrease of 2 million barrels. And normally these things would have an impact, and originally they did. But again, the nature and the makeup of investors in the energy markets is no longer those taking, inventory, taking supply, delivering or processing energy products like oil, like gas, propane, natural gas, take your pick. What we have now are speculators, investors, money managers, hedgers, who really don't have a physical connection to the market and who are more driven by headline. So we have really good news for consumers, bad news for anybody who's got money in the energy sector. The nervous Nellies following whatever happens in the Fed are in fact running the show. And it's not just that. Good economic news, strong job numbers in the United States, good economic productivity from industry. Those are all seen as very, very negative signals because, of course, everyone knows that the U.S. Fed and other central bankers around the world who didn't turn the taps off soon enough last year and thought that we could continue to have stable, low mortgages much longer are now in the process of literally crashing the economy by raising interest rates. And of course, interest rates aren't just, 5-6% and going up 0.5% or 0.25% at a time. They are actually cast at a time when there's a lot more debt, not just private debt, but public debt. So, 8%, or we're approaching it that here in Canada, could look a whole lot like the 18 to 21% that we saw back in the early 80s because of the level of debtedness of Canadians. And same, I think, applies to other countries, but no more precisely than here in wonderful Canada, where we have a government that has taken the liberty of substituting economic activity, killing pipelines, blocking our energy from getting to global markets, even though there's a huge demand for Canadian energy. And as a result, driving down the value of the Canadian dollar and driving up inflation. Yes, it's something you're not going to hear from central bankers because the reality is that they don't want to look at the elephant in the room. Stifling Canadian energy, preventing it from getting into markets, telling Japan, telling Germany and the rest of them, you're not going to sell liquid natural gas or any form of natural gas, and they should find hydrogen, which of course is implausible and impossible without using massive amounts of electrolysis, which of course is derived from energy creation. Much of that has to be used by fossil fuels. The reality is that we're going to be looking at very tepid times for Canadians. Energy prices will continue to rise overall because of the value of the Canadian dollar, because Canada simply doesn't want to get back in the business of producing energy. And that's a tragedy that will be borne by all Canadians. That aside, this week we are likely to see about an average of 3 to 5 cent a litre decrease right across the country. So starting in Vancouver, look for prices to move down to the lower $80s, maybe $82. The rest of BC in the $65 range, coming down from $68. In some places as low as $55. We will see Alberta move well below $20 on average. Again, lower taxes. That means that many stations will be looking at $10, $15. Neighboring Saskatchewan and Manitoba still staying in the $44 to $42 range for Saskatchewan and $47 for Manitoba. Ontario, look at the $46 dropping to about $40. And in fact, watch for diesel to drop even faster, maybe down below $50 over the next week. That's just a price we haven't seen going back to November of 2021. As for Quebec, same thing. Diesel will fall, but also gasoline down 4 to 5 cents a liter. And we'll be likely looking at prices in the range of $1.54, $1.55. As far as the Maritimes are concerned, they too will benefit, but they have to wait until next Friday to get the benefit the rest of the country has. Again, I make my point. Regulated prices don't work in an environment where we have internet, where we have price prediction, and really, other than making bureaucrats happy and getting them to second guess markets, it really doesn't do anything for consumers except hold off price decreases until the last minute. And of course, when you get price increases, they hold on, they immediately pass those on. So I don't see the advantage there, but unfortunately for the Maritimes, having that security blanket of regulated prices continues to hurt them perhaps more disproportionately than any other region in the country. Well, Nima, that's my wrap for this week. So hold off on gassing up. You can wait till this family day long weekend in many parts of the country. You're going to save a bit. This time next week, that should start to turn around. We'll talk next week. Thanks, Nima.